Good morning, everyone, and welcome to this morning's webinar. We've started a little bit a few minutes later, for which I apologise. I mean, part of the reason is I'm just going over my notes about the US election, and I'm just trying to get my head around the various permutations of what might happen, what to look out for, and try and give you a sort of very simple summary of perhaps the key states to watch out for, particularly if you're going to be trading when the results start coming out. And I believe some of the results are going to be coming out about this time tomorrow. So as you can imagine, it's all going to get very, very volatile. And of course, that assumes we do get results which are confirmed and do give a clear pointer, because it's all very well experts saying, well, look at this state, and if this happens, then this will happen. That assumes that the race is the presidential race is clear cut, and there's certainly no I don't think no overwhelming evidence of that. David and I both agree that possibly on the presidential side things are a little tighter than some of the polling would suggest. But as always, it will be reflected in the markets. The markets, they've got a very keen ear to to what they think may happen, and also what they would like to happen. As we all know, they will be, lots of money will be made by those who know what they're doing, who control the markets. Anyway, before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And very quickly, as always, we will be looking at the charts through the prism of volume price analysis. It's the methodology that David and I have been using for many years, and which is now, the explanation of it is now available on the books that you can find on Amazon. And for Forex, and really for all the markets, if we think about it, we look at the technical picture, which is what VPA gives us, but we also look at what's happening on the fundamental landscape and also the related markets. And of course, at the moment, we also need to see the political, because of where we are in the election cycle. With regard to the Forex market, we've developed these very particular indicators to help us identify quickly where is the money flowing, because at the end of the day, trading and investing, it's about tracking money flow, and money flow reflects sentiment. It reflects whether market participants are in what we call a risk on mood, or are they on or a risk off mood. In other words, it tries to measure the level of risk appetite that traders and investors are willing to take on at any given time. And that appetite ebbs and flows, and it ebbs and flows as a result of geopolitical events, political events, obviously fundamental news, and at the moment, we've also got the virus going on in the background. And here in the UK, those of you who are joining us from the UK, as you know, we are due to enter another period of lockdown as for, is it Thursday, David? As of Thursday until the 1st or the 2nd of December. So it's certainly, pretty bad. Dreadful in some parts of Europe. So, we all thought maybe this the virus would be dying, reducing and then perhaps dying off, and at least being, wouldn't explode as much as it has. Whether it's as lethal as it was back in March and April remains to be seen. But certainly, as I've said, I've mentioned in our VPA room, and I've also mentioned on my Twitter feed, is from a personal basis. As I said, I think that possibly, we will be seeing a peak certainly in a couple of weeks' time, after which I think it will go down further. It will start to decrease, but these days when it's a bit like a trend, it's a bit like a, you see a chart, figures go up and up and up, and then they come down again. Right. Very quickly, we all seem to forget about what's happening on the fundamental side, but there is an awful lot going on this week. Not least, we have the NFP on Friday. It's the first week of the new trading month, so we've had all the PMI numbers coming out. We've had the RBA overnight. We've actually got the FOMC, but the FOMC is not on Wednesday, it's on Thursday because of the election. And please keep a close eye on your calendars as we see. And Thursday, we've also got the BOE. So as I said, data doesn't stop, and there's the here are the NFP, which is coming in on Friday. But of course, the one event that is overriding everything is obviously the US election. And I won't bore you with, you know, as I said, just very, very quickly give you the highlights. You know, from the media, the various polls, the betting markets, they're all pointing to a Biden win, possibly. And whilst that's interesting, what we want to know is basically how is that going to be seen? How is the market going to react to that? And in some ways, the market is kind of reacting to that already, because a Biden presidency, and certainly what they call a blue wave, in which the Democrats gain not only the presidency but also the Senate, is perceived as being very sort of loose, more, if monetary policy could get any looser, but much more stimulus, interest rates lower for much longer. The Fed, you know, will do whatever it has to do to, you know, to try and mitigate the effects of the pandemic. But the Democrats have pledged all sorts of, you know, it's a kind of case of both parties are going to spend, and it's a case of, well, you know, it's a bit of a bragging competition. I'm going to spend more than you. But very broadly speaking, how that translates into the market, and particularly the US dollar, is that we will see the US dollar should weaken. That's what I'm trying to say. And with a US dollar weakening, as I said, with more stimulus, then the expectation is that it will be good for equities. That's what I'm trying to say. Now, Trump, then there's all sorts of other permutations. A Trump win, but he doesn't have control of the, you know, he loses, it doesn't have the Congress or even the Senate, perhaps. And you have what's called a lame duck presidency. You have a lot of uncertainty. You have a lot of, no one knows if anything is going to get passed. Is a stimulus bill going to get passed? That is probably the worst of all worlds, because even though this is a very uncertain business, you will always hear the expression, markets don't like uncertainty. Well, you know, don't be a trader or an investor if you don't like uncertainty, because you've got to suck it up, basically. However, be that as it may, confusion, chaos, a disputed election, results not coming in on time, which are all perfectly feasible. Markets will not be happy because, you know, the certainty that they want is the certainty of knowing who is going to be in charge. And if they don't have that, then you can expect a flight to safe haven, of which the US dollar will be one. So really what I'm trying to say, bottom line is, of the currencies to watch, first of all, it's the US dollar, and obviously all the other safe haven currencies, of which the Swiss franc, the yen, and also, funnily enough, we also have to look at what gold is doing, because gold hasn't really kind of reacted too much so far. So, and the key with gold is, if gold starts rising sharply and the US dollar starts sorry, I don't know. Apologies for that. Did you hear that, David?
No.
Oh, thank goodness. Sorry, I was getting a squawk through in my ear, and I thought maybe it was coming through to you. What was I saying? Yes, the safe haven gold. Worst case of scenario is if you see gold rising strongly and the dollar rising strongly, we know there is something serious going on, and you know its risk appetite there is no appetite for any kind of risk. And of course we have to watch the VIX. The VIX is elevated at the moment anyway, as we can see here. It's trading at 37, even while the indices are moving higher. So we have a lot of divergence at the moment. It's a very, very mixed picture. This is not the norm. You would see what you should expect to see. If the futures are going up, equities are going up, the VIX should be falling. It's all to do with the puts and calls. I'm not going to go into the ins and outs of why that is happening, but just be aware and have the VIX on your dashboard to see what is happening with regard to sentiment. And if your broker doesn't give you a chart of the VIX, investing.com is a great site. It's all free. As I said, it'll be there in all the time and in real time as well. It's not delayed data, which is absolutely fantastic, which is what we want. So there we are. What's the NASDAQ up to? Very quickly, that's up as well, not by very much, but as I said, it's markets at the moment, they are what they are. They trying to see reasons of why they're doing this and why they're doing that. It's just the traders, investors, they're all trying to position themselves. No one really knows what is going to be the eventual outcome of this election. You can pore over data, you can pore over the polls and the betting market, and then what happens, as happened in 2016. You can get a complete shock. He wins. And we've had shocks here in the UK, as we know, with the Brexit vote, with the election last year. So it's understandable that there is a degree of nervousness. But what to look out for very quickly, as I said, if certain states do come out for Biden strongly, and that's places like Florida, North Carolina, and Georgia, and it's clear that he is going to be ahead, and markets will be a great relief, and off we go. We're off to the races. But if there is no clarity, there is no firm, the election isn't giving a conclusive result, that's when it will get very, very messy. Or even a result that is actually within the next few days. It could, if there is a mix-up, if there is a dispute, with postal voting, who knows what could happen. So we just have to be prepared for all eventualities. And as I've said to our traders in our on our forex program and in our VPA chat room, as traders, what we have to do, we just trade what we see on the chart. By all means, be aware of what is going on in the background. Look at the charts. What are the charts telling you? Do you see a trading opportunity? If you have our quantum trading indicators, they will certainly highlight those opportunities to you. They will be staring at you. And even if those opportunities are, maybe contra to what maybe, you were reading in on your news feed, just look at the charts. The indicators will tell you, are they buying the dollar? Is the dollar being sold? And trade accordingly. But in this heightened environment, don't expect to stay in a trade for very long. Come out as soon as, if you have a profit, or you keep your stop losses possibly tighter than you would normally do. If it's hit, come out. You can always go in again, and if you have profit, take it again. You can always go in again. And one of the indicator that will help you more than anything in this kind of market is the volatility indicator, because it is triggered when the price action is outside of the average true range. And we have a really nice example here. We've just gone through the London Open. This is cable. This is my 3-minute chart for cable, and this is a perfect example of what I mean. Here we are. We look as though we've got a nice breakaway from the volume point of control for cable. As we can see here, we've actually got some nice volume under here, but we then have a looks like a widespread up candle. those traders who don't use a VPA would look at that. They would say, oh, good, you know, you've got a nice up candle here. This is going up again, and there's buying under this wick under here. You know, it's this classic sort of candle analysis. And then this a bar comes in and whoosh, it goes up. And you think, oh, great, I've got two, and possibly I think I'm getting in here. And what happens? The price reverses, and you think, oh, well, why did that happen then? And it goes straight back down to the volume point of control. Well, two things. First of all, the volatility indicator is triggered because that bit of price action in that candle is outside of the average true range for this for cable in this particular time frame. This triggers in real time. What then happens? Most of the time, not always, but I would say over 90% of the time, the price action retreats to within the spread of the candle, where it will either reverse or it will congest. It does congest a lot of the time. And then what happens is when this candle is triggered, the high and the low of the candle become very, very important support and resistance points. So if you like, it's this is the volatility candle, as its name implies, is triggered when there is volatility. Volatility is momentum. It's the compression of time. It's when there's an inrush of energy into the market. And just like when you have I don't know, when something explodes, as it were, then everything has to calm down. And that's what happens after the volatility has been triggered. The momentum slows, and it slows either by going into congestion of the volatility candle. And when these are triggered on the slower time frame, you see them on the daily chart, you will know, generally speaking, you will have a period of congestion within the spread of the candle. Doesn't mean there are no trading opportunities on the faster time frames, but that is what it's telling you. It's telling you that the market has to calm before the direction is determined, and it could be a continuation in the original direction or a complete reversal. But a complete reversal will be once it's cleared the low of the candle. Now, the other clue as to why this, if you didn't have the volatility candle, and this is if you don't use volume, is look at the volume bar under that candle. It is anomalous. You've had this candle with nice lot of volume, this one again the same as this one, and then you have whoosh, you have this candle, but look at the volume. If that was a genuine move, that volume bar should have been possibly up here. So as I said, in talking through other bits and pieces and the volatility candle, I'm glad to say the market, one of the pairs has delivered it, exactly as I was hoping. And you see this, as I said, in all time frames. It will help you get out of a position, and even if that position then carries on in the same direction, you think, oh, I could have stayed in. It's not worth it, because most of the time it will simply congest, or as in this case, it will reverse. It will keep you safe. And also on the break here that we have, this is why a lot of traders find sort of breakout trading. They say, oh, it's littered with false breakouts. Well, of course you're going to have false breakouts, but if you use VPA to try and establish whether it's actually a fake out or not, and clearly it was here. And what happens? It goes back to what we call the volume point of control. And the volume point of control is volume over time. It's volume price over time, and markets congest all the time. Markets do not go up and down in straight lines. They will go up. They will go up, they will pause, they will congest, and then they will carry on, or they will reverse. But what we are also seeing here from a support and resistance point of view for cable is, yes, you have the volume point of control, which is what we call the fulcrum of this chart. but it also acts as either support or resistance. And we've got the VPOC. We've also got a price-based support underneath it. Can you see the red hatch? This is from what we call our accumulation and distribution indicator on NinjaTrader. There's more strong support here. There's even stronger support here. We've got volume support. So in a sense, even if you didn't look at the VPOC from the perspective of a potential breakaway, you've got these very, very strong platforms of, as I said, price-based support and volume-based support. And the other advantage of looking at price, looking at potential trades using a breakaway tactic is your stop loss, because you can afford to put your stop loss at a much tighter to your entry point, because the chart tells you where the stop loss should be. You put it, well, here you've got all sorts of choices. You could put it all the way down here, or you even could put it at, just below this support level here. Now, with cable, very kindly, it's actually delivering, yet more lessons in terms of breakaway trading. We're coming up. I would possibly caution against looking to take a trade very close to the London Open, because the London Open is a classic for traps, for putting traders onto the wrong on the wrong side of the market. In this case, as I said, we had this failed breakout here, back to the volume point of control, back to this very strong area of support. Then we have another attempt to break higher. The volume is rising. This is pre-market. This is 740, as we see here. This is the tick speedometer indicator, which is only available for NinjaTrader and TradeStation. What it also does, it fulfills a number of functions, but one of the functions is that it gives you an insight into the activity and momentum that is going on behind the price action. Back in the day when traders were in pits, you knew what the activity was and the momentum simply by the noise that was going on in the pit. And there are lots of videos online where you can see pit trading, and they're all yelling and shouting, and the cacophony and can be overwhelming. And so, as the noise level rises, there's a lot of participation. But when there is no noise, what is that telling you? Well, there ain't very much going on. There's no participation, there's no activity. So this is what this indicator does. So when it goes into green, and these are the regular volume bars that we have on there. When it goes into green, we know there is a lot of noise going on behind the price action, which is actually what we want to see. Because if you didn't have that, and you didn't have the volume bars, and all you're looking at the price action, you have no idea, what is the participation, what is the activity behind that price action. So that's what VPA does, and that is what the indicators that we have developed they will do for you. Now, clearly this is the 3-minute chart. I haven't even looked at, let's have a look what the CSI tells me. I can see on my other screen that possibly this piece of price action is being driven by lots of dollar selling, David. Yeah, and that's what I'm looking at the moment. Can I pass over to you, because I think David has probably has been looking at this in multiple time frames. As I said, I simply picked this up because I spotted it, and because I wanted to tell you what the volatility indicator will do for you, particularly as we move into these very kind of unstable markets over the next few days. But I mean that, I don't mean that necessarily in a negative way, or I mean that in the sense that volatility does mean opportunity, but you have to understand what you're seeing and how to react to it.